So hello and welcome to Entrepreneur Extraordinaire, folks. This channel is for real estate for the outsider. In case you're wondering, where has AK been? Folks, I've been to Dubai, to Pakistan, to Abu Dhabi. I've been traveling. As you know, my dad passed away a few months ago, so I had to go there and take care of some business. But I'm back with a lot of videos, a lot of content, because guess what? A lot is happening. Interest rates have changed. Amber Heard is killing Johnny Depp. I'm kidding. I had to make this joke because the trial is actually happening effectively in my backyard in Fairfax. Johnny Depp and Amber Heard. And I've seen them myself. Wow. What's happening with interest rates? Oh my goodness. Interest rates, as if they could not go any higher. They jumped from 4% to now 7%. 7. That's a lot. What's interesting is this all happened in a matter of 4 months, folks. So what happens to the housing market? What happens to the inflation? What happens to the interest rates in future? What happens to the Federal Reserve, the FOMC meeting that's coming up in May? We're gonna do that and more in this video today. Should you jump in? Should you wait to buy a house? Is this the best time to buy a house? Are the house prices are coming down in some cases? Hint, I always have something for you guys. So if you're here for that reason, stick around to learn more. So if you're new to this channel, my name is AK. I'm an entrepreneur extraordinaire. I've been an investor, entrepreneur for a long time, folks. I invest in affordable housing for people who are in need, people who have bad credit, people who are disabled veterans, and so on and so forth. Today I was at the Ukrainian fundraiser event, folks. Somebody asked me, what do you do? And I told them what I do. They said, wow, why are you making all these YouTube videos? And I said, why not? I want to give free information to you guys and to everybody else out there. So please, if you have friends, and tell them, So let's talk about real estate, right? So 30-year loan, okay, it's almost at 7%, okay? So let's do the math. Like, what does a loan for $500,000 look like with this kind of loan, folks, where the rates are at 7% versus what they were 4 months ago at 4%. So at 4%, $500,000 of loan, maybe $2,000, property tax and $1,000 homeowners insurance. The payment at 4% comes out to be $2,603 per month. Now, let's run the same numbers for 7%. Let's compare. Wow, $3,543. So the difference is effectively, I'm seeing on my screen, $1,000 right now. For some people, $1,000 is not a big deal. It's not a deal breaker. But for a lot of people, it is a deal breaker, okay? $1,040 to be exact is a lot of money, folks. And to understand that, if you have a 5-1 arm, like a few months ago, you'll be paying at least, I would say, $600-700 now more. And it will keep increasing as the rates go up. We will see what happens because there's a meeting by the Federal Reserve. Guess when it's at? It's in May. It's coming up, okay? Which is when I go to London, and I'll tell you guys what I'm doing there. So I'm going to share my life with you guys. I'm seeing some properties in London, and I'll share that with you guys so you guys can see the global perspective. My perspective is changing, folks. I used to spend in Arizona, Pennsylvania, DC, Maryland, Virginia, Florida. But now I'm thinking, let's look at global. Maybe we can offset the economies of scale. For example, if I go to some other country and the prices are cheaper, dollar value is higher, I can buy something at cheaper price. And oh, by the way, if you are enjoying the content and you know who you are, okay, and you want to tell your friends, tell them about AK, the Entrepreneur Extraordinaire, a great channel that wants to help the outsider, okay, folks? Here's the question. How big are interest rates going to get? Are they going to go into double digits? Are they going to go to 7%, 8%, 9%, 10%? And does size really matter? Folks, the size does matter. Size matters, okay? I'm just kidding. All jokes aside, interest rates do matter. But the question is, do interest rates bring up the house prices or bring down the house prices? No. So the answer is no. Interest rates don't really directly drive the prices of housing, but they can effectively, indirectly affect the housing prices. To prove that, let's look at a chart from the past, okay? In 2007, the rates were at 6.63% and the prices were high. But as the rates went down until 2010, the prices were also down, which is the opposite of today. In today's market, the house prices were going up and the rates were low. Now the rates are higher, but the house prices are still going up. So what is going on? What's causing this dilemma? This hasn't happened really historically in the past 10 to 15 years. But there are other factors, folks. We are in a war. Yes, we are in a war. U.S. is effectively indirectly at war. U.S. is providing weapons of mass destruction and soldiers and money and hundreds of millions of dollars of aid. I have a separate video for that, folks, if you want to watch Ukraine and Russia war and what happened, what I think my perspective is. But the U.S. is involved. Your economies are affected by that, folks. So all these things are affected. So we're in a war. That boosts the inflation that we're at, folks, okay? That's going to increase the inflation rate. Subsequently, it's going to affect the house prices, house construction prices, because lumber goes up, granite goes up, tiles go up, and everything goes up, right? So all the construction cost increases. That means the cost of that is getting passed to you. The consumer is going to pay that cost. So you better watch out, folks, because the cost is being passed to you. You're paying double the price. You're paying at least 30-40% higher for a house that used to cost $400,000 or $300,000 2 years ago, right? But the bottom line is, for the consumer, for people like us, for an average American, it's going to destroy your financial positioning. Inflation is bringing the value of your dollar down, folks. That's what that means, right? Inflation means that you have less savings. If you had $100,000 at the bank, right, your $100,000 is not worth $100,000 today as it was yesterday. It's worth a lot less. In addition to that, we also have supply chain issues, right? We have ships that are stalled at the ports. There's delays in offloading ships because there's a shortage of labor. People don't want to go back to work, right? So that's another problem that we're facing, supply chain issues, right? That's also going to jack up the prices. Now, there's also demand issues, right? People are saying there's demand issues. Is there really a demand issue? I'm not so sure, folks, and I'll talk about that in a second. What I found is there's about 1.6 million houses in Florida that are just rented, that are not being sold, owned by investors, just in that one market in Miami, okay? So what does that tell us? That tells us there are bigger entities who have bigger goals and bigger money that are holding money hostage, okay? So there's not a real shortage of houses per se, but the shortage is because people don't want to invest in the stock market anymore because the stock market is crashing. So effectively, they're going to go to real estate and then invest the money there in the single-family housing, because the people want to buy houses and these investors know where the money is going, where the people are spending money, right? So what my point is, folks, that this is not really a housing bubble. This is like an inflation bubble, okay? And what will Feds do about it? Let's talk about that for a second. Feds have already raised the rates, right? Rates are at 7% now. They were at 4%. So they increased the rates, 25 basis points. They're going to raise again, probably 50 basis points, and the rates might jump again. So what that means is that they're not able to make a dent in the market, okay? They're not able to make a dent. So if they keep doing this, what they're doing is effectively crashing the stock market. If you look at the stock market, it's suffering. I have some friends who lost $14,000 in a day. I mean, that never happened in the past 2-3 years. So the stock market is being affected effectively by this move that the Feds are making. The Feds have to be very, very cautious, folks, because this can come back and bite them in the butt. Why and how? Because people can start losing jobs. Cost of borrowing is increasing. 4% versus 7%, less people can borrow money. Will that affect the housing market if the demand is still high? I don't think so, folks. It will slow it down, though. But here's an interesting question. With all this is happening, right, are the house prices going higher every year? That is the big question. Think about that for a second. Are the house prices high in every state? And I'm here to tell you that the YouTubers are wrong. The house prices are not going higher anymore in every single state. Now, having said that, let me prove my point. It is true that in the bigger cities like Houston and New York and LA and other cities, okay, and in New York, prices are going higher. But there are cities that I present to you that are actually going down or stabilizing, okay? You might ask what markets. Look at Boston, okay? Look at Connecticut, okay? Look at parts of Maryland. And what about San Francisco, right? They're stabilizing. Why are these economies are not growing, right? There's a reason, folks, because these cities have the demand. The rates are not affecting them, it's the demand. They have the demand, okay? But they also have the supply, okay? These cities have the supply. And the rates did not increase astronomically, folks. If you look at the historical rates, we were already 6.63%, not too long ago. So 7% is not that far off. We're not that high, folks. People think the rates are higher, oh my God, because you're spoiled. You're used to 3% interest rates, but the rates are not 3% anymore. They're at 7 or 6%. And that's not the end of the world, folks. So, folks, as I've shown you, house prices will not keep increasing in every single state. And I've given examples of states where house prices are going down. There are cities where house prices are going down, such as Connecticut and Boston and so on and so forth. And I give you more examples too, folks. I can give you more examples if you want. Please drop me a line or a comment, and I will give you more examples of that. I'm not shy of giving examples. Whatever I say is based on facts, based on numbers. I'm not cooking up these numbers myself. So, what I want to tell you guys is this, okay? If you want to buy a house in this market, it's up to you, folks, your choice. I personally would not put my money in this market unless you're an investor, you're buying for investment purposes. You can get higher rents. For example, one of my properties used to be rented for $1,500 in Maryland. Now they're paying $1,800 plus $300 extra for pets, okay? that's the situation, okay, of the rental market. So if you're an investor like myself, it's Christmas to you because you can go buy some property at a higher price. Sure, you're paying high, but guess what? You're also charging $300 a month extra per rent, okay? And rents are only gonna go up, folks. That's a whole separate video. Right now is not the time to jump in the market because you don't want to catch a falling knife, folks. And I do this for a falling knife because the rates are going up and the house prices are kind of going up too. If you want to catch a property in the cities and states where it's stable. So at least know it's not going to drop drastically, okay? You don't want the prices to drop when you're trying to buy a house. If the prices drop, that means the house you paid for $500,000 now worth $400,000 and you lost some money. Folks, think like an investor, folks. Think like an investor, and that's what investors look at. They don't look at what the price of goods are today. They look at the price of goods for tomorrow and the day after. And that's what I'm going to teach you guys. Start thinking about 2 years increments, okay? Maybe 4 years and 5 years. Now, I've invested in stocks. They're going down every day. Guess what I do? I don't freak out. I don't pull out. I'm putting more when it goes down below a certain threshold. That's what a smart investor does, folks. They dump money in the market when the market is down. When everybody's scared, you want to be brave. Okay, you want to be brave when everybody's scared. So it remains to be seen if the Feds will succeed in bringing down the inflation bubble, right? That's subsequently affecting the housing market and affecting you guys and affecting poor Johnny Depp, who lost $600 million actually while he was with Amber Heard for 4 or 5 years. I mean, this girl can spend money like anything. I'm just joking, folks, but I had to bring that in because it's happening in my backyard in Fairfax, right? So, here's the thing about rental, folks. If you're paying a high rent, so what, right? So what? A rent commitment is only for a year. But the house commitment is for 30 years. It's like marriage. You can't get out for 30 years. Sure, you can sell, but if the prices go down, you can't even sell. So think before you buy, folks. Buying a house is no joke. It's a wonderful thing if you have one. Okay, I have plenty of those. But if you're buying your first house, second house, okay, be very careful. It's a 30-year commitment. It's not a 1-year commitment. Anyways, I'm visiting London next month, folks. I'm really excited, as I mentioned, but I'm talking to some realtors there. I want to see the London market is like because it's hot for Airbnb, it's hot for rentals. I want to see the property scene in London. I want to share with you guys a global perspective. I'll be making lots more content. I'm so excited to be on camera. So excited to be with you, with my audience, who we're at 5,700 or 800 subscribers now and growing. And I'm going to start pumping more videos, folks, give you more content. So we're going to grow. Let's see what happens, remains to be seen. But I'm excited and I'm back, folks. And I love you all. Until my next video, have a fantastic day. Bye now.